Morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 5th of October 2011. Hi guys, just going to be looking at the 4 majors, starting with the euro against US dollar. Let's have a look at the daily. I've plotted some lines here. You can see that we're very much in a well extended downside trend, and then we had, most importantly on the hard right edge here, we saw a massive sell-off going into this week, and price really breaking some major lows. Significantly here at 134.00 we saw a massive break lower going into the Monday session, and we saw price really dropping. However, yesterday's session saw a total turnaround, a massive bullish candle. This stems from a number of things, in particular the banks or the unions, the European Union, hoping to try and alleviate or trying to help the banking systems here in Europe. There was word out that the European officials were contemplating more coordinated action going forward, which is important. Bernanke also mentioned that the Fed was more than happy to help with further stimulus, as suggesting possibly further quantitative easing, question mark. So we saw the rally occurring yesterday. Now this could be potentially seen as a breakout, a classic breakout, and a classic indication of a pullback. Now that pullback of a breakout tends to occur as drastic as this, not necessarily or it happens all the time, but this pretty much engulfing this massive bearish sentiment move here. When we saw this breakout on Monday, we, myself in particular, and Nikki, just looked at it and thought, well, further shorting for sure. I mean, this was a definite bearish indicator from the market that things were really looking further to the downside. And then we had Bernanke having his say and really saying, well, listen, yeah, we know there are issues. We know that there are certain countries out there that should be doing a lot more to be helping with the stimulus globally, pointing pretty much figures at the Chinese market because of the way that they actually apparently are pegging their currency against most other other currencies, global currencies, and so not really helping with the actual bullish sentiment that the market really needs at this time, and is going as far as even thinking about putting forward some sort of or signing some sort of agreement, putting in place in the House, in the state, trying to see if they could alleviate or try and or put into place penalties against countries who have pegged their currencies for whatever reason to try and to really make them look a lot cheaper, and so really downgrading the actual outlook of trying to throw stimulus into the market. There's a huge hoorah about that in the States. Some say for the pros, and others pretty much for cons. But this led us to yesterday evening, which out of the blue we heard from Moody downgrading Italy's banks by quite a significant amount. This coming at a time when we are really not wanting to hear that the 4th largest economy in the Eurozone is having troubles. We know that Italy has, there's talk that they have massive debt issues. Having their banks being downgraded will not help with the banks ideally trying to find borrowing, etc. like that, or help borrowing. It just won't work, especially in times like this. It's the last piece of news you want to hear out of Eurozone. And will it be a significant shift? We are, if you're looking at the charts, we are testing the high highs. Asian market, we saw a slight dip lower not very much in fact, and we are now hugging the upper side of that bandwidth going into the European session open this morning. 134, the 13400 happens to be a price support and resistance. We also have, if I just zoom out, you also have this uptrend or the prior support and resistance level on this upside here. You can quite clearly see above us at the 13400 there happens to be a crossroads. We have price support and resistance there at 13400. So psychologically, will that become a stop measure as price continues to drop lower? And could we see some sort of consolidation here? We are going into the latter part of this of the week. We do have a lot of we still have a lot more news coming out, especially tomorrow and Friday. Tomorrow we have a lot of the news of interest rates, primarily UK side and also in the European Union. Are we going to see the EU drop their figures, the interest rate figures from 1.5% to possibly 1 or 0.5? Did they raise it too quickly? Are we going to see them actually get involved and bring that minimum bid rate down again? The same for sterling. The official bank rates are tomorrow. I don't see it being changed. I think it'll stay 1.5 for years to come, or for the foreseeable future, for that matter. So euro tomorrow, are we going to see them getting stuck in and actually trying to bring that interest rate down? I think it might be a bit too late now. But then Friday we also have huge amounts of news. We have non-farm payroll, which is the first Friday of every month, and which does really factor into the market. So yeah, could this be the last send-off, a failed attempt to try and grasp these areas here to try and get back up to before we see the ultimate plunge in the euro? I don't think if everybody wakes up today and the market really gets going, we're going to see that the news out in Italy with the downgrade that Moody's occurred is going to start this whole cycle of a failure at 13400 if it gets there, and we're going to see prices testing the lower side. If the stimulus if the news initially got the euro going comes to anything, we need to see it trading above 13400, and it has to be trading above these levels here to definitely. We got to see the market today really taking what happened yesterday and taking forward above 13400. Failure to break above 134 clearly just means we're seeing a consolidation, a pullback, and we're going to see a continuation occurring in the next coming days. So what are we looking for potential trades intraday for euro? Well, if you look at the 4 hour, for example, you can see we had the bounce. We can put in those areas of 13400. You can see quite clearly there that 13400 happens to be the ceiling level prior. We had a price support on that area. Look for a potential fail of the price swing here at roughly the 132.70-ish mark. We do have a support here. If we go to our hourly chart in particular, you can see that clearly we are trading above a price swing support and resistance level, or 138, thereabouts. But if we break below those lines again, then we're definitely breaking this intermediate uptrend. Swing highs dictates upside movement. You can see for the hourly, the CTC is part finished. We have a blue arrow, blue candles, but the CTC is still red. I think we're still going to see this being red until such time as we're actually trading above 134, and in fact, if we can get above the institutional moving average on this time frame. To see further extensions on this, we do need to see price trading well above 130, the 133.57 or 6 mark, because you can see we've had prior resistance there. We had an attempt yesterday on the US session just before the close. That failed to materialize. We saw price pulling back, and we've now retested a prior resistance and support, and we had a bounce earlier today. But are we going to see that reattempt higher? Look at your relative strength index to see if we are getting convergence, divergence on price as we head higher. 13400, as I mentioned, is where price definitely needs to be trading above. So until such time as it's trading below, we're still in a negative consolidation pattern. So it's just a consolidation against the major negative trend. So going forward, want to be trading above 13400 to see any bullish upside movement. Otherwise, we're just buying, if we are potentially buying into a resistance level. So, and we've had resistance just before that. So consolidative against the underside. This is what we're expecting, or what we think it could possibly be, is just in a consolidation after a major breakout, and what we're looking for now is a continuation lower. But the continuation lower, we need to see the price string being breached. So here at 137.28, got to see a break of that to see further downside movement, and our first potential target would be the all-time low here that we saw not too long ago at 13,1500. The same can be said about sterling. Yesterday, same thing. We had a massive drop off on Monday morning. Asian market trading session on Monday, we saw huge gap to the downside. Yesterday we saw further down movement, right, and we saw price literally testing the lower end of the 15,3500 mark, which happens to be the long-term swing, so psychological support and resistance level. Yeah, massive support and resistance along this area on a number of occasions throughout the previous year, as going into this new year. And then we've now psychologically saw a bounce that fell to clear prior support and resistance, going back up to the 15,7500 mark, and we saw price top out with a lot of wicks on the underside of 15,6500, and we looked at potential downside sentiment creeping back into it, which did occur, and we since then have been testing to the downside. However, we saw on the US session that yes, we saw price reverting to the upside, and then going to the Asian session, we are now testing the lows of these candles again. So very indecisive. The fact that we saw a bounce and this candle was closed high at the range at a support looks favorable for a potential a change in market sentiment, question mark. Ideally we want to be trading above the 15,500 mark in particular or get a bullish engulfing here to definitely confirm that we are seeing a potential bounce. If that was the case, then ideally 1565 would be our first target, followed by the 15,7500 mark. You can see that the sterling pair is still very significantly in a downside move, bearishness across the board. CTC is well extended in our favor, and the moving average is well evenly placed to the downside. If we to see further shorting opportunities, it has to be trading below 15,3500. So if we're going to see any further downside, we're going to have to see price trading below 15,3500 going forward. If it breaks below 13,500, we are in free fall, guys. There's a lot of space. We've had a slight pause here at 14,800, but between 14,800 and the all-time low that we've seen May of last year, there's a lot of space in between these 2 points. So target 1, target 2, a lot of space in between. So got to, if we are to see a miraculous save, it would have to be above 15,3500. If it closes below, then psychologically I think we're just going to see a lot of selling because of that. Moving on to the US dollar Swiss franc, let's have a look at the daily. Not much trading range yesterday. We saw slight consolidation, but you can see that the US dollar has been gaining a lot of strength recently on this particular pair, primarily because we saw the Swiss franc government really pegging their currency, and it was talk that they're actually going to increase that to 130, 135 from 120 mark. So we've seen slight consolidation this morning on the Asian session. Going into European session open, we've seen price reattempting those highs. Ultimately, we're looking at the next potential target, which happens to be roughly around the 93.50 mark as our next potential target for this pair going forward. CTC is well extended on the daily, and if you look at intradays, we're seeing the CTC pretty much giving us bars across the board. We are seeing slight consolidation on our 30-minute. We're having a swing here, so ultimately we want to see price trading above this previous consolidation here, resistance, before we see another reattempt of the highs here at 92.30. So price needs to getting above that. You can see a slight consolidation here. We have the red arrow, but our CTC is pretty much still blue across the board. So indecision at the moment now. It's just giving us a consolidation effect. Notice how I am on a 30 that we saw the 50-period moving average acting as a very strong support area for this pair over the previous weeks. And then for the first time we saw a major breakout and a consolidation. So are we seeing psychologically this pair starting to think about more of a bearish sentiment creeping in now as we've headed higher over the past couple of days? There's a psychological support area at the 916 mark. We saw support and resistance at this area just recently. If we do see a failed attempt of the 925 to see further extensions higher to 9350, as I mentioned, then we could see this as a consolidation to the downside, and ultimately we're looking at 916 as potentially a target. So we want to see the CTC going red. Ideally, we want to see it trading below the price swing over here, for example, at the 920. 920. So if you look at your 30-minute chart, we've got to look at 920 price support. So it's got to be trading below that. Notice, however, that the institution moving average came to save this pair on this particular time frame. A noticeable bounce, psychological bounce at that area there. So we know the institution moving average takes preference. As long as we're trading above the institution moving average, then we should still see further extensions higher or further momentum higher. And we are seeing this is just a consolidation correction, but we notice that the highs have got slower as we've gone into as we've headed noticeably higher during that period. We saw a breakout of this consolidation range, and now price is failing to trade above that price support. Could this be the new resistance? Are we going to see price just fall over now? We need to see price tracking above that. Ideally, going forward, we need to see 9255 being breached. Otherwise, we're just trading consolidation, and it's just a waste of time. So we've got to see a break of 925, 9255 in order to see further extensions going forward, or we're going to see a break low of the 9200, which happens to be price support and resistance here, of the price swing, to see another possible reattempt of the lows we saw just recently at 9155 on these time frames. Last pair of the day is US dollar Japanese yen. This is a really good one to gauge. Yesterday's huge momentum, we saw the S&P 500 really gain strength yesterday. That pretty much mirrored with the euro US dollar. We were expecting to see something on Japanese yen. That didn't quite materialize. So very, very strange how the US dollar is doing one thing on one part but not on another. And you can see quite clearly here, for example, that yesterday's trading range very, very small compared to what happened yesterday with Benaki, etc. like that. But then again, the Asian, especially the Japanese yen, has been seen as a safe haven currency pair recently, especially after the downgrade, the pegging that Swiss franc went through. A lot of people have looked at the sort, but it hasn't really moved though. You can see it's just flatlined. Noticeable support and resistance at the 70-10. The 50-pair moving average has played a part over the past couple of months, pushing this lower, keeping in check. We had a failed attempt here at the 77.70 mark. We had a failed attempt just recently. We saw price pretty much falling over after reattempting that 50 levels moving average, and we saw bearish engulfing. But what it's done though is we're back in line where we're testing this little upside move here against the major downside. But failed again yesterday. Failed to break above that 7700 mark. Is that psychologically telling us we should be seeing the US dollar fall further to the downside now? We are being pushed lower. We are being governed at the moment now by the 77 level. We need to be trading above it in order to look at least the 77.70 being our first initial target. We've been there before, but it looks like that 50-pair moving average is having something to say about it, and psychologically this bearish here is really pushing it lower. Ideally, you want to see a trade lower than the previous swing. The lows over here, for example, which take us back to at least the 76.60 mark. Trade below that, you can see noticeably here was a price support, quite a strong one. Psychologically, we'll look at everybody will start looking at the lower end of 76.10 as our potential first target intraday. So 76.60, if we just look at our intraday hourly chart, for example, if you can put that in, let's have a look and see where we are now. So there, psychological 76.60 I mentioned. Notice the support and resistance going forward. Resistance, breakout support, break lower, resistance, support, support. A lot of wicks over here, really finding support, which happens to be the institution moving average too. She's playing a part in it as well. See the swing highs on this. So seen noticeable breakouts, but each time it comes back, we're finding that the institution moving average on this pair has saved the day. This coincides with the 76.60, which happens to be a price support and resistance level, and we've seen a slight bounce. Are we going to see it stack up though? Very tentative. We've got to be trading well above, in this case, this previous one at 76.70, 2 in particular. Getting above that, we'll definitely look at ideally scenario where we're going to be looking at potentially the next trend line, or either the high of 76.90 followed by a break and close. We'll see us definitely trading or attempting to retest those previous highs that we saw here, well above the 72.20 mark. So interesting. CGC is bearish. Notice that. We had the same thing over here, bearish, but we haven't broken below a very strong support and resistance level at 76.60. It needs to be trading below that. A lot of wicks, don't need faked out. So by breaking below 76.60 and by closing below, she'll be closing below the institution moving average and a very strong support resistance line. We'll definitely take that as a serious consideration for looking for further bearish sentiment creeping in, and ultimately we're looking down here at 76.10 ultimately as our long-term support and resistance line as our first potential ultimate target for this pair. So breach of 76.60 with momentum would definitely be a signal for further downside movement. However, if we see a correction and we see price still sticking above this level, this trend line, then ultimately we could see further highs being generated as the week progresses. Be aware that news will factor in tomorrow afternoon in particular, as well as non-farm payroll on Friday. We could see things occurring. So if you want to bide your time, you could wait for a clear break above 76.90 before we trade clean air to the upside, or wait for a break of 76.60 to see further clean air to the downside. Very, I wouldn't call it clean air, but it's definitely giving you a suggestion we should be looking further downside, because there happens to be a major swing high here, trend line, intraday trend line on this line. So break of that would obviously confirm that we should be looking at a new trend direction being formed, and we should be looking at previous lows as our target. That's it, guys. Hope you have a fantastic trading day. Make sure if you're following the rules in CTC to please govern it with fantastic money management rules. Your templates will be worth nothing if you don't back it up with sound money management rules. There's going to be a lot of volatility over the next couple of days. We are going into the latter part of this week. We have non-farm payroll. First Friday of every month is a non-farm payroll. So if you don't trade non-farm payroll, stay very well away from it. We do see a lot of volatility creeping in. What we want to do is see the market, what it does. We want to see what the unemployment figures are in conjunction with that. There's a lot of news. It just dictates if we are seeing growth in the US economy. And if we are, then obviously it bodes well going forward. If we don't, then it's just going to mirror exactly the sentiments that are out there, that the American market is still very much in the grips of potential further downside. You've got to create jobs in order to see the market regain. If we don't see jobs being and we don't see any new jobs being made available, then obviously that there is no change in market sentiment, and we should be seeing further lows going forward. So heads up, keep that in mind. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Trade serenely.